Arkhouse Management and Brigade Capital Management have reportedly offered to buy retailer Macy's for $5.8 billion. That's according to people familiar with the situation. The offer values the retailers at $21 a share. You can see the stock all the way up to $20.80 at this point. It's a gain of 19.6%. Joining us right now is Dana Telsey. She's Telsey Advisory Group CEO and Chief Research Officer. And Dana, what do you think? Does this make sense to take it private?
An offer does make sense. It's just who's the right buyer for this offer. We've all seen what's happened before, whether it's real estate or it's splitting off e-commerce. But what's inherent about Macy's, they're close to the customer. You look at their doors they have, and they've pruned their doors over the years. They're now at around 784 in total. And who wants to be closer to the customer? It's got to be a strategic, I think, that makes sense.
Okay, so if you were to take this company private, are you doing it because you want to be able to do things that you couldn't do as a public company, invest more in getting closer to your customer? Or are you doing this because you want to harvest? And this is still a cash flow company. You want to take and harvest things, pay as little as you can to keep the stores open and milk it for all it's worth. What happens?
I think it's the first. I think there's things you want to do. I think look what they're doing with investing in private brands. Look at the small format strategy they're putting in place. Look at digitization. And they're doing this in the face of a consumer who's under pressure. So it's hard to get a multiple in a valuation if your top line's not growing. And that's what investors want to see. Investors put multiples on names because of growth. And right now, top line is more stagnant.
So are these investors, I don't know these guys, are these investors who you think are in it for the long haul and really want to be there? They're not somebody that's like a private equity type thing where you take and flip it?
Certainly feels like I don't know them either. I haven't met them. But when they said it's about the real estate, you need strategics who's also about the operations, given the framework this company has.
Yeah, and they say that, they believe they can line up the financing. That's obviously a question. And, the offer came December 1st, right? And Macy's board didn't see the need to necessarily come out and say they got the offer. But in terms of what you think the company, in the absence of a bid, needs to be doing more of right now, because you mentioned department stores don't get much of a multiple. They're kind of valued as, no growth, runoff type businesses. So what should Macy's be doing kind of regardless of an offer?
I think what they've done in terms of pruning the stores and continuing to do that, sell off some of the stores that don't mean as much and invest in where the traffic is, certainly with the hybrid and outdoor malls, and they're getting same-store sales that are above the average in those stores. In addition to look at what they're doing with the merchandising, whether it's bringing Nike back, whether it's UGG home, whether it's investing in luxury. And now you have a new leader at Bloomingdale's while Tony takes the reins of overall Macy's. It's going to be interesting to see the curation of the merchandise that drives sales. They have to be able to continue to gain share of that core consumer.
Hey, Dana, question about the real estate and the real estate value. And I was just looking, Alexander, by the way, I'd said that, Kmart didn't work on the real estate front. Alexander's did. But there's an argument to be made, I think, in the case of Macy's, that it's not like you can turn some of those spaces into apartment buildings or large office spaces, because in some places like New York City, it's unclear whether New York City would allow you to tear it down. And then the question is, if you're not going to tear it down, how much value is actually in that space itself? Because given what's happened to brick and mortar retail. So do you believe, and someone just sent me an email about it, that the real estate unto itself in some ways may be considered overvalued?
I think overall on the real estate side, we're talking about fulfillment. And the goal to be closer to your customer, that's what the stores are all about. And you may not need all the stores, but you certainly, once you're leaving locations, the fact that there is a lack of new development in retail real estate, that's what they have. They have that supply and are able to fulfill. So I think you will see them close stores over the next few years. Right now, they have less than 10 that they plan to close in 2024. But I think they're going to upgrade the retail real estate and be where the traffic is.
So, go ahead, Andrew.
No, I'm just trying to understand. So you don't think that the strategy would ultimately be to sell off some of the key prime real estate? And the question is, how much could you get for that key prime real estate, right? On 34th Street, if you decided you didn't want to have the store there, and I know that, look, that is their flagship store, but there's only a handful of places that have that create effectively potentially the true underlying value that we're talking about when you even look at that buyout price.
Exactly. And frankly, when you think about those stores that they have, it is the Macy's 34th Street. It's Bloomingdale's on 59th Street. Those are the stores that have the aura and the prestige. The stores that lack investment, is there going to be a look at those and say, Are they needed, or what should they be used for? And today, the value of retail real estate may be different than what it was 5, 6 years ago or 7 years ago when Starboard was out there. So the assessment of that retail real estate valuation, there hasn't been a lot of trades that have gone on, but certainly those prime locations, I don't think you'd want to give them up. And what's a better use than a store? Residential? I don't think you'll get some of the same valuations.
Dana,
Right.
I'm just looking at the stock. For the last year, it's down 21%. For the last 5 years, it's down 43%. Is this something that is not a melting ice cube?
It's been a melting ice cube. I mean, look where it's been already. It's been a melting ice cube. You certainly see the earnings guidance that they've given. It's below last year. And even when you think about next year, while you do not have debt that you need to pay down, you have a consumer that's still challenging. That's why it trades at low valuations.